Hey everybody, I wanted to give you an update on the 2023 estate taxes that we have to worry about. Let's jump in and start with history so we have some perspective on this. 1977 through 2002 and then on to the major change in 2010 looks like this. 2002 is when we hit $1 million on the exemption to pass money to heirs. Okay, so when we pass away, we have an estate tax we have to worry about. But in 2002, that exemption, the first $1 million, did not count. We didn't have to pay taxes on that. Then something that surprised everybody, in 2010, we permanently adjusted the estate tax exemption to $5 million. Okay, now I said permanently adjusted. It would take lawmakers to agree and vote on any changes going forward. What they did prior to that was just argue and quibble about it and make changes every year. You notice how many changes that we have on this chart previous to 2010. 2010 made a major shift, surprised everybody, and we hit $5 million. Then they handed it over to the IRS and said, you just adjust it to inflation going forward. So the only way we're going to make any major changes to our estate tax exemption dollar amount is through the lawmakers agreeing and voting on it. Okay. A few other things that we changed in this. We added portability. Okay. Portability means if you're married and one spouse passes away, you file a form and the surviving spouse gets the double exemption. Okay, so the first spouse to passes that exemption to the surviving spouse. Okay, then one other thing, there used to be a difference between an estate tax, a gift tax, and a generation skipping tax. Now they're all aligned under one window, and the exemption applies. So everything you have over $5 million is due is going to have an estate tax tax. Okay, so 2010 through 2017 we just kind of moved along, shifting for inflation, but then we had another change. We had a stimulus package, let's call it, a reduction in taxation where the estate tax was doubled. This was snuck in at the last second. You can look at the history books and find out who and why was responsible, or who was responsible for this and why. But they temporarily doubled the estate tax exemption through 2025. So in 2026, the doubling will end and it will go back to the 5 million. So we are under a temporary relief that allowed 10 million to pass to our heirs plus inflation each year. So you see the 11 on up to 12 at this point, which we are adjusting each year. And 2023's is now pushing 13 million. We're at 12,920,000. If you pass away in 2023, the first almost $13 million is exempt from any taxation. So taxes, what are they? What taxes do we owe? And the federal estate tax is actually a sliding scale. It seems kind of ridiculous because we're talking about money over 13 million, right? Over 12.9. So the first $10,000 over 12.9. It seems ridiculous we're talking about $10,000 bracket when we're talking about people with $12.9 million net worths. Okay, but that being said, the first 10 is at 18, and then you see it's a sliding scale, little bit by little bit, up to 40%. So if you are at, say, 14 million, everything over that 13.9 is going to be taxed at 40%. 40. So if you have one of the larger estates, if you're worried about estate taxes, there definitely are planning techniques and things you could do to be proactive to reduce that taxation. So certainly consult with some good attorneys, good estate planning attorneys, and a very good financial advisor that can help you avoid some of that taxation. Now, we do have some states that want to add a tax on top of that. Good thing the feds say you can deduct it dollar from dollar for what we owe us, but understand there are states that are going to start wanting your money even at $1 million, even at $0. If you pass away with that state being your primary residence, they're going to have claim over your entire state. So there's 18 states that we need to be very careful in if we have larger estates, or honestly, if we have money at all. And Arizona is not one of them. That's why we all moved to Arizona, where the sun shines year round, right? So the handful of states we need to stay away from are 3 handfuls, 3.5 handfuls. Connecticut is on the list. We do have to be careful about that. Anything under 9 million is fine. Anything over 9 million is going to get taxed. So you may owe Connecticut, but not owe feds. If you had 12 million, you were exempt from taxation federally, but Connecticut jumps in and takes their share of it. Then we got DC. Anything over 4 million, you're going to get in trouble. 12 to 16% taxation over 4 million. And Connecticut, Washington D.C. is certainly, from land value and money value per capita, a fairly wealthy state. So we do need to pay attention to that. If you own real estate in any of these states, you need to be careful. If you can claim it, or they can say you had it as your primary residence, then they get to tax the entire estate. If it's a rental property or a second home, then they only get to tax what's in the state. So again, if you own real estate in Connecticut or DC or any of these states, you need to be careful. Then there's Hawaii. Anything over 5.49 million is taxed at 10 to 20%, depending on how far up that scale you go. That's another state with a lot of wealth in it. So watch out for that tax. Washington State, where my parents are, where I grew up, anything over 2 million, you're in trouble. That's a problem, right? We got to be very careful about that. They are the estate tax in that state is exempt below 2 million. Anything over 2 million, you're going to pay 10 to 20%. It jumps to 20% very quickly there. So that's a difficult state. All right. Vermont, we're jumping all over the board here. You're at $5 million, 16% flat tax rate. The exemption in Rhode Island is $1.6 million. Anything over that, you're going to get taxed. And you got Pennsylvania. So Pennsylvania's got the inheritance tax. I think that was the first one with the inheritance tax. So inheritance taxes can start at $1 depending on who you're giving it to. So be very careful in Pennsylvania. Make sure that you've got a good estate planning attorney and knowledgeable people that know that state. Oregon, only $1 million exemption. Everything over $1 million, you're going to throw away 10 to 16% of your money you leave behind, your wealth that you leave behind in taxes. Again, it's as simple as moving out of these states. I love Oregon. I went to school there. I opened a restaurant and ran it there. I love Oregon, but I would not die in Oregon, that's for sure. Then there's New York. Anything over 6 million, 3 to 16%. And again, it's that sliding scale. It jumps up real quick, just like the federal taxation. And New Jersey has the funky inheritance tax. This is an alternative to an estate tax. So there's no exemption. That's what's really strange about these inheritance taxes. It could be from $1 depending on where you're sending this money. So a lot of the times this is going to depend on who your heirs are, whether you're going to pay a tax like an inheritance tax. Then there's Nebraska. Nebraska's got the weird inheritance tax as well. Be very careful in that state. Minnesota, 3 million. My whole family seems to have married Minnesota. My dad had, or no, my grandfather, not my dad, grandfather had 4 Minnesotan wives, survived all of them. I married Minnesota, a lot of Minnesota in my family. So I speak fluent But 13 to 16% tax on anything over 3 million. You got to be careful in that state. Massachusetts, anything over $1 million. There's a lot of money in Massachusetts, so beware. You're going to be thrown away up to 16% to taxation on everything over $1 million. Maryland, they've got the funky inheritance tax and they have the estate tax. They're double dipping. They just want your money. Don't die in Maryland. Maine, no inheritance tax, but anything over 6 million, you're paying 8 to 12%. Kentucky, let's see here. Kentucky, going off memory. They have the funky inheritance tax. There you go. Again, these weird little inheritance taxes. Remember, every state can just write whatever rules they want. So just be very careful in Kentucky. Possible from $1, they're coming after you, depending on where this money is going. Iowa, funky and estate tax, or not estate tax, but inheritance tax. Illinois, they're going to go after you anything over $4 million. Okay, and again, another state, especially in Chicago, your house alone could be worth $4 million. So be very careful in Illinois and owning real estate in Illinois. Well, that's the update. All the numbers have been adjusted for 2023. Unless any last minute changes happen. Those states that I went through, again, if you own real estate in any of those states, please be very careful. Please make sure that you talk to an estate planning attorney in that state and work with a knowledgeable financial advisor and help you work through that so you don't waste the money on taxation that you didn't really need to pay. Those estate taxes, especially at the state level, are very avoidable. And that's why we all moved to Arizona. There's nothing wrong with that. Great place to retire, and the estate taxes are zero here in the state of Arizona. If we can help in any way, please let us know. Give us a call, shoot us an email. You can even use the messaging forms below and send us a comment or a reply. I pay attention to all those things. So let us know if we can help out in any way. Give us a call, share this, send it to your friends, let other people know about us and the education we provide. See you soon. Thank you.